Broadcom is an American success story. This is a fabulous semiconductor company that started 30 plus years ago in Southern California, and they grew to be the third largest semiconductor company in the market with a very large market cap, really creating the semiconductor chips that the market needed, predominantly in the communication space. So, as consumers began to buy iPhones and mobile devices, Broadcom really rode that wave. They're now adapting and trying to be a part of that data center build out, and they've seen their stock price really fly up. That's great. Overall, I'm all for great companies getting rewarded with a great stock price. But I began to feel that this stock price had gone too high. It's one thing to be a great story, it's another to have a stock price that's much too high. This company is not the stock price, and this stock price is not the company. The stock price, in my opinion, has detached itself from the fundamentals and the valuation of Broadcom and become a little too high. In fact, I began to short this stock in the early June timeframe. I'll share those details with you at the end of this video and share my position in my shorting of Broadcom. Let's go through the fundamentals. I'll value the company. I'll share with you what I think of the company and what I'm going to do with this short position on Broadcom. Overall, I think the company is great. I'm not saying anything bad about the company. It's a great company, and it's going to continue to operate really well. My only beef is with the stock price, and that's all this video is about. Let's get into the fundamentals. Broadcom has become one of the largest companies on the stock market with a valuation of $647 billion. That is a big, big cap. Revenue is $42 billion, and net income is $10.23 billion. The company has recently acquired a company by the name of VMware, and they're probably doing quite well with that acquisition, but that's what also added to the whole market cap of the company. The PE this year is a whopping 60. That's a pretty high PE. And the forward PE is supposed to be 27, which is far more acceptable. They pay a reasonable dividend. I think it's a little low because of the stock price. I was buying into Broadcom years ago when the dividend was quite high in the mid 3%, which was really attractive. But now with the stock price being much higher, the dividend rate has really gone down. The investing community really likes this stock. It's a strong buy by analysts, and they believe it's still discounted by 24.77%. It's really been a winner over the last couple of years, but over the last month, it really has come down in price, coming down 18.27% in the last month. The revenue for the company is good. They've been growing, and this includes mostly organic growth, but you'll soon see the acquisition of VMware in their numbers, which should really show a step up in growth due to an acquisition. So overall, I like the growth of Broadcom. The balance sheet is a little concerning that they have so much debt. They had to take on debt to finish that acquisition, and they should really focus on paying off some of that debt. You can see that it stepped up from 39.6 billion to 74 billion. So it'll be important to see that number come down. I think they can do it because they produce a lot of EBITDA. Cash flow is excellent for this company. It's a high cash flow generating company. I use cash flow to value companies, and I'll use cash flow that Broadcom produces in the valuation based on free cash flows. Looking at the forecast, a lot of analysts cover Broadcom, as they should, since it's a very big company. Some analysts are really enthusiastic about the stock, saying that it's going to be a price target of $240. And some analysts are a little more pessimistic, probably joining my ranks, saying that the stock price may be a little too high. Overall, their earnings per share is really looking good. They're at $4.87, which is a big improvement from historic years. That's good to see. And it's expected to be just a nice growth on earnings per share. If that does happen, I can understand why people are paying the price they do for Broadcom. But just one note is I believe that semiconductors are cyclical. Some people might want to debate that. And I would be of the camp that semiconductors are cyclical. You could study any company and they'll have really good years followed by some not so good years. And it's just a common attribute of the industry. So to see a forecast like this, I think is a little too optimistic. I don't see any rough patches. I don't see any down years over the next 5 years. It's just all upside, which is frankly not believable. What do I think Broadcom is worth? Well, I'd like to answer that question by showing the valuation I ran on Broadcom using their free cash flows and using their earnings per share. Just a little history. I've been a Broadcom investor for years. I owned the stock for multiple years, and I sold it at the end of 2023 after a really nice gain. So I'm not a newcomer to the stock. I'm not a newcomer to the company. In this model, at least the calculations that I use, I've been using on Broadcom for many years. Let's go through it. So overall, I think the stock is being sold at a premium of 30%. Most of the premium comes from their free cash flow forecast. they're doing great with free cash flow. And I am very generous in showing a forecast of free cash flows that's going to be awesome, growing at 10% and having a very high starting point. A discount rate of 9%, which is reasonable. It's a little bit higher than another company, let's say a Meta or an Apple, because they have so much debt. Their intrinsic value based on cash flows is 439 million. I add cash, and I take away that big debt balance. Remember that big debt balance. It should be a liability. Most people would agree. So the equity value I see for this company is $375 billion based on my free cash flow model. But the market has the company valued at $647 billion. Overall, it's a 44% premium. If we look at cash flows, mix in cash and debt. Earnings per share give a much favorable view of the company. If I use earnings per share in a reasonable PE of 25 and a very good growth rate of 15, I get to a fair price on the stock. It's only being priced at a 2% premium, which really is a fair price for the company. Overall, it's a 30% premium being paid on Broadcom, which is interesting. How valuable do I believe Broadcom is? How desirable is their type of business to me? I'd like to answer that question. First, how do I rank companies? First, to put a company in the most desirable quadrant of this 4-quadrant graphic that I've put together, these are companies in the green that have really strong barriers of entry. Competitors can't come in and compete against them very easily, if at all. It's almost like a monopoly-like power where they can continue to grow their revenue profitably and generate great free cash flow. And then there's companies in the red, which have too much competition, don't make very much money. Sometimes they just lose money, and they're really dying off as an industry. I think Broadcom's a great company, and I would put them kind of in the middle between being part green, part gray, which is just a company with some competitors. Obviously, Broadcom does have some competitors, but they do have some businesses that have very good moats. So overall, I think Broadcom's a great business, very desirable. On a good price, I would definitely be a Broadcom investor. So what should I do with my short position on Broadcom? Well, let me go through that, make a decision. On June 10th, I began a short position on Broadcom. In essence, I sold shares that I didn't have, and I got proceeds from that sale. And on a secondary event, I sold more shares after that, to the point where I've sold shares amounting to $3,288. If I close the position today, I would buy back those shares for $2,856. So I'd make a gain of $432, 15% return in less than 2 months. That's a very good rate of return. Now, I've seen this stock come down, and the valuation is not grossly overpriced, just overpriced. Having said that, I'm probably going to close this position in the next few days. The stock's really up today, and I hate to close it when the stock's really rallying. I'd rather wait for a pullback. We're in a market where semiconductors have really been sold out, and prices have been dropping on semiconductor stocks. So I'm willing to bet that I'll probably catch a day when the Broadcom stock really sells off and the price goes down again, and I could probably catch a few more points on this. But overall, shorting Broadcom was a good idea. I'm glad I did so. So that's my video on Broadcom. Quick reminder, just an investor, just sharing my experience as an investor. In this case here, my experience in shorting Broadcom. I want to remind you that I offer no investment advice. I don't recommend you short Broadcom. I don't recommend you buy or hold Broadcom or sell it. I've been a Broadcom investor for a long time. I own the stock for a long time. I think it's a great company. I just think the stock price was way too high, and I made a bet, and it looks like it's working out. Thank you for watching the video. I really appreciate it. Good luck investing in 2024.